Good morning, everyone. Today's Thursday, October the 25th. This is Anne-Marie, and we've got the SPY outlook here. Once again, we've got another lower low. It's not quite as aggressive as maybe the prior lower low, but it is in a space where we are likely to have a little bit of a bounce, right? Maybe something like this, because we are sitting at the bottom. Again, this is a regression channel. If you watched yesterday's SPY outlook, you'll see that this is a 95% confidence interval regression channel, so things are really edging out. Also notice this is the 200 simple moving average, and it is sitting right there on top of that. We should have a bounce, and indeed we do have a bit of a gap up into this relative congestion area. Pre-market looks like about maybe 142.13 and such. So really where we're sitting at is somewhere around right there, right? Let's move that up so that we can have a snap to grid that's a little bit all right, so I surmise we've got a little bit more bounce action ahead of us before we return to downside momentum. Again, in my mind, what we are actually doing is having a simple wave retracement. It should come into 140. Very often it comes into 137, and the typical retracement of a CD leg is the 61.8. Now, again, that would be a little bit nerve-wracking if that happened to us at this stage, but it is something to pay attention to. Now, things don't go down in a straight line, of course, as we know, so we are in a place that feels a little bit overdone. And so what we want to do is take a look at this and see how far up it will bounce before it ends up having some trouble. It could be all the way up to here. Not really sure. What do we need to look for? Again, let's pay attention to this. If you look at this, you're probably a day trader or a short-term swing trader. Pay attention to things like lower highs. If I have another lower high and I'm coming off of a level, it usually telegraphs a lower low. Well, my lower low is only 8 cents lower. And so 6 cents lower, actually. Yes, 6 cents lower. And so that really does mean dampening action. If you want to take a look at, this will probably show it to us. If we take a look at that, the CCI is generally flattening. It's certainly less than this one, right? So if I have a lower price here, but a higher reading on the CCI, it means that my negative momentum is dampening up. And of course, when we see things begin to print with live hours, we will notice that we are up in the middle of this gap region, but not quite anywhere near the fill of the gap. We're just above this high, right? We've come up to test that overnight. And so the question is, well, I'm in the middle of this gap action. Doesn't it seem reasonable that I come up to fill it? And of course the answer is, why, yes, of course it's reasonable. It's extremely reasonable that that's what happens. But what happens after that? We have this great big action here and another print that may end up being pretty important, right? We could get all the way up here. Notice how this collides into the 30 on the hourly chart. That is something someone looks at. So what do I suspect? A little bit of bounce action here today. If we lose the low, we're on our way to 140. But I suspect little bounce action necessary. Could go all the way up to the midline of this regression channel, could stop, and that midline is sitting right near the 50 simple moving average. So these are all things we need to look at. In the end, we still are in the middle of a large retracement, right? So we've got a little bounce in the middle of a large retracement. Those of you that are short on a swing, it's time when things bounce like this, it's time to take a little profit. Let the rest of the chart move into resistance, and as it begins to fail, you add back to the position, all right? Just the nature of the game. Good luck today.